Kailash and Company Chartered Accountant has been appointed as a statutory auditor of Diksha Limited for the financial year 23-24. The audit team has completed the audit and is in the process of preparing the audit report. The management of the company has also prepared a draft annual report. So, moment you see the word annual report, the direction should be towards SA 720. SA 720, which deals with the other information. So, this is something, sometimes when you start looking at the keywords, you can make out. Okay. Now, audit in charge was going through the draft annual report and observed that the company included an item in its annual report indicating downward trend in the market prices of key commodity raw material as compared to the previous year. So they are showing a downward trend. However, the actual profit margin of the company has gone in a reverse direction. It has gone in a totally, completely reverse direction. The audit manager discussed this issue with the partner of the firm, who replied that auditors are not covered with such disclosures made by the management in their annual report. They are not covered by such kind of disclosures which are there in the annual report. It being a responsibility of the management. This is because it is the responsibility of the management, and that is what it is. So now, is the partner's approach appropriate to the situation? Analyze the issue with reference to the standards on auditing and the auditor's duty with regard to the reporting. So how do you deal with this issue as far as the standards on auditing is concerned? Now, in this case, soldiers, see what he's highlighting, that there is a downward trend in the market price of the key commodity or raw material compared to the previous year. Downward trend in the sense the profit should go up, but profit has not gone up. The profit has gone in a reverse direction. So profit has reduced. So now what they are highlighting in the annual report and what they are highlighting in the financial statement, there is a mismatch. There is a complete mismatch which is standing here. So how do you deal with this situation is what we have to understand. How do you go about this particular situation? Now, as I highlighted to you, that moment you see the word annual report or draft annual report, you should link it to SA 720, auditor's responsibility in relation to the other information. So now what happens? Suppose say there is a misstatement in the other information. See, you have to compare the draft annual report with the financial statement and see that is there any inconsistency. And based on the inconsistency, you find that there could be a material misstatement in the other information. See, other information means it's an information included in the annual report which is other than the auditor's report and the financial statement. Say director's speech, say chairman's speech, then the highlights, analysis, okay, and corporate governance report, corporate social responsibility report, labor welfare report, environmental reports, okay, all these things will be there. Management discussion analysis will be there, ratio analysis will be there. So you have to see that whether these other information which is given in the annual report and the information which is highlighted in the financial statement, they are not inconsistent. They should not be inconsistent in nature. That is what they are trying to highlight here. So as per SA 720, auditor's responsibility in relation to other information, the description of trend in the market prices of key commodities or raw material is an example of amounts or items that may be included in the other information. Now, the auditor's discussion with the management about the material inconsistency, what you can say in the other information may include, first of all, you have to request the management to provide a supporting for the basis of the management statement. What is your supporting in the other information? You are highlighting this way, you're telling that there is a downward trend in the raw material. So what is the supporting for that? Now, based on the management's further information or explanation, the auditor may be satisfied that the other information is not materially misstated. Example, management explanation may indicate that there is a reasonable and sufficient ground for the valid differences of the judgment. There may be a reasonable ground actually here. So you have to highlight that. You need to ask the management regarding the same thing actually here. So as I highlighted to you, first of all, you need to have a discussion with the management for material inconsistency in the other information and the financial statement. You have to request the management to provide us support for the basis of management statement in the other information. What is the basis for your statement? That's the thing here. So the management will give an explanation, they will give an information to the auditor, and the auditor should be satisfied that the other information is not materially misstated. Then the auditor's duty with regard to the reporting in case given as per SA 720, if the auditor concludes that the material misstatement of other information exists, then what happens here? The auditor will request the management that please correct the information. You will request the management, go ahead and please correct the information. If the management agrees to make the correction, the auditor shall determine that the correction has been made. So suppose if they refuse to make the correction, so suppose if they make correction, it's okay. If they refuse to make the correction, auditor shall communicate the matter to those charged with governance and request the correction to be made. So you will ask them, please do the correction. First you will try to understand. See, you made a statement in the other information, give some explanation and information to it. If you're satisfied, okay. If you're not satisfied, then request them to correction. If they're not making correction, then you communicate to TCWG, please make the correction. Now in this case, reviewing the draft annual report, the audit in charge noticed that the company reported a decline in the market price of the key raw material compared to the previous year. However, the company's reported profit margin in the financial statement, it is showing an increasing trend actually here. So now in such case actually auditor will discuss the issue with the partner of the firm, who replied that auditors are not covered with such disclosure by the management in their annual report. It is being the responsibility of the management. Now in this case the partner is completely incorrect. Maybe he may not be aware of the standard SA 720 which deals with the other information. Maybe he should be sensitized about other information, SA 720. Okay. With this, I conclude the answer for this question. We'll see in the next video. Thank you.